Imagine a world where money isn't printed, where banks don't hold your funds, and where transactions happen instantly across the globe without any middlemen. That world isn't some distant future. It's here, and it's called cryptocurrency. But crypto is just the surface. Behind it lies blockchain, a revolutionary technology that is quietly reshaping how we think about trust, ownership, and value in the digital age. At its core, blockchain is a digital ledger, a system of record that everyone can see but no one can alter. Think of it as a notebook that is duplicated thousands of times across a network, where every transaction, transfer, and piece of digital data is recorded in a block, and each block links to the previous one, forming a chain. Once information is recorded, it cannot be changed, erased, or manipulated. This creates transparency, security, and trust without relying on banks or centralized authorities. Trust is no longer given to an institution. It is built into the system itself. Digital assets, which include cryptocurrencies, tokens, and NFTs, live on these blockchains. They represent value, ownership, or access to unique digital items. Unlike traditional money, which is printed and controlled by governments, digital assets exist entirely online yet can be traded, sold, and verified with precision. Bitcoin, often called digital gold, has a finite supply, can be divided into tiny units, and can be transferred globally with almost no friction. Ethereum takes this further, allowing programmable contracts, decentralized applications, and automated agreements that execute without any human intervention. Crypto and blockchain aren't just about money. They're about rethinking entire systems. For decades, finance, art, gaming, and even identity relied on central authorities to verify value or authenticity. Blockchain changes that. It gives power back to the individual, enabling peer-to-peer transactions that are secure, transparent, and global. Artists can sell digital art directly to collectors through NFTs, bypassing galleries. Gamers can truly own in-game items and trade them freely. Investors can lend or borrow money on decentralized finance platforms without banks. These systems open opportunities that were impossible before, creating a new era of digital ownership. But with innovation comes risk. The crypto space is volatile. Prices can skyrocket one day and crash the next. Security is crucial. Losing your private keys can mean losing access to your entire digital fortune. Hacks, scams, and regulatory uncertainty make it challenging for beginners. Yet, despite these risks, blockchain technology continues to grow. Individuals, companies, and even governments are exploring decentralized systems because they see the potential to remove friction, increase transparency, and create new ways of exchanging value. The potential of blockchain goes far beyond money. Supply chains can now be tracked from origin to consumer, reducing fraud and waste. Voting systems can become tamper-proof, increasing trust in elections. Intellectual property, digital identity, and healthcare records can be secured in ways that were never possible before. Digital assets are just the tip of the iceberg. Blockchain is the foundation of a new digital world, where trust is coded into the system rather than placed in human hands. Let's look at some real-world examples. Artists who never had gallery access can sell NFTs for millions of dollars directly to collectors. Gamers can earn income by selling rare in-game items on blockchain-based marketplaces. People in countries with unstable currencies use cryptocurrencies to protect their savings. Companies issue tokenized shares, allowing fractional ownership, giving small investors access to markets that were previously out of reach. These examples show that blockchain isn't just about money. It's about opportunity, fairness, and access on a global scale. The ecosystem extends into decentralized finance, or DeFi. Instead of banks holding deposits and approving loans, smart contracts allow individuals to lend, borrow, and earn interest automatically. It's open to anyone with an internet connection. DeFi platforms can provide services that traditional banks cannot, offering flexibility, efficiency, and global reach. But they also carry risk. Without regulation or oversight, mistakes or hacks can be costly. Understanding the fundamentals becomes essential if you want to navigate this new financial world safely. Even the way we think about value is changing. In the digital era, ownership is no longer tied to physical objects. Virtual land, rare collectibles, and digital art carry real monetary and cultural value, often tracked and verified on blockchains. Communities form around shared ownership, governance tokens, and collective decision-making, allowing people to have a voice in projects that interest them. This is a shift from passive consumption to active participation, enabled entirely by technology. The future will continue to evolve, Smart contracts will automate even more of our transactions. DeFi platforms will make banking accessible to billions who never had access before. Digital assets will integrate into gaming, entertainment, real estate, and even everyday purchases. Learning how blockchain works is no longer optional. It's becoming essential for anyone participating in the modern economy. Understanding coins, tokens, NFTs, DeFi, and how ownership works online will allow you to see the bigger picture of our rapidly changing world. If this story helped you understand the basics of crypto, blockchain, and digital assets, take a moment to subscribe to the channel. More deep dives into the systems shaping our digital future are coming, and you will not want to miss what happens next. Every transaction, every token, and every block is part of a story bigger than you realize. And understanding it is the first step toward navigating this new digital world with confidence.